Hello and welcome to Verico Academy. Business plan development and implementation. There are many different forms of business plans. You can use the template that we have provided you with this program. You can go onto the internet and get another sample of a business plan template. You can create your own. Whatever it is that you do, just be sure and remember that there are 6 parts to creating your business plan. The first part is to gather the information. So it's important that you know what's going on in your economy, what's going on in your market, and what's going on in the industry in order to create your business plan. As you'll see from this presentation, we're going to be supplying you with that kind of information. The second thing you need to do is look at and analyze your previous year's business. It's important for you to know what you've done in order to know what you want to do going forward. The third part is to review what you have to work with. We're going to be doing a SWOT analysis as part of this business plan, and in the SWOT analysis you look at your strengths and weaknesses and the industry's opportunities and threats, and you determine what it is you have to work with and how you're going to work with it. You'll develop strategies and action items with which to carry out each one of those strategies. You'll set goals for yourself and perhaps your team, and then you're going to track and measure as you achieve those goals so that you know if you're achieving those goals or if you need to revisit the goals and perhaps make some adjustments. There are 6 steps in order to achieve your goals. The first thing that is recommended is that you write down the goals, and that's what you're doing here today in creating your business plan. You should share your goals with people who are important to you. Those people will help you by encouraging you and supporting you in your efforts. You need to check your goal setting and achievement progress regularly to make sure that you're on track and that you're going to achieve your goal. Perhaps you'll want to adjust your goal as you check it. You need to identify and eliminate obstacles to achieving your goal. You need to have a plan B. What are you going to do if, for example, interest rates increase? How will you handle that? What will be your plan, or how will your plan adjust if that occurs? You need to reward yourself and celebrate your goal accomplishments because that motivates you to continue on. And evolve your goals as necessary, which is very similar to number 3 in that as you're checking your goal setting and achievement progress, you might need to evolve the goal or change the goal dependent upon what you have done. What we've done is taken the CAMP survey, which is done twice a year, in the spring and in the fall, and we're providing you with some information or statistics from that survey. The first thing we're offering to you is the consumers and what they feel about the economy and the way things are going. The question that was posed to the Canadian consumer was, Canada's housing market is in a bubble. 46% of those surveyed responded with a 6 out of 10, which is considered to be a neutral response. The next statement given was, I'm concerned about a downturn in Canada's housing market in the next year. Again, a neutral response, 5.84 out of 10. The high scores indicate low confidence. Those were found in the consumers that reside in Quebec, Saskatchewan, Ontario, and Manitoba. The low scores indicate high confidence, and those were found in Atlantic, Alberta, and BC. Next question or statement, Canada's superior banking system will shelter us from significant downturns like the one experienced by the US. Again, a neutral response for the consumers surveyed. House prices in my community are at a reasonable level. Again, another neutral response by the consumers that were surveyed at 5.62 out of 10. So what you have to think of is, why are the consumers so neutral? What does this tell you about the consumers? And does this help you in forming a strategy? We think perhaps the consumer just doesn't know what to think because they have had so many opinions, so much from the media, that they just don't know what's going to happen next, because some things that have happened in the past 3 years are things that we never thought would happen. This can help you in forming your strategy. What we do know about the consumer is that they're looking for you to be a specialist. They're looking for you to reassure them that the decision that they make is the right decision for them, and you as a specialist in this industry can do that. The comment, my family would be well positioned to weather a potential downturn in home prices. They scored a 6.72 out of 10, or almost a 7 out of 10. That's encouraging. So most people feel that they could live with a downturn in the home prices. Real estate in Canada is a good long-term investment. Again, 7.27, which is good. So that means that people will continue to invest in real estate. I'm optimistic about the economy in the upcoming 12 months. A 6.02 out of 10. Again, That's considered to be cautious optimism. And please note that this survey was completed when the Greek crisis was at its peak, so that would cause them to be somewhat concerned about the future. I would classify a mortgage as a good debt, 7.07 out of 10, and that's good. Consumers' outlook, that they are fairly confident, they have a positive and improving outlook, they listen to the media, so we need to be aware of that, and they're looking for direction, which is where you come into play. Here's some information about the consumer choices and their level of satisfaction. The consumer satisfaction with the mortgage terms, all ages 7.4 out of 10, but the older, greater than 55, scored higher at 7.9 out of 10. 71% of those surveyed were either completely satisfied or satisfied to some degree. Satisfaction with the whole mortgage experience, 7.6 on all ages, 8.2, again, more satisfaction from the older group of over 55. Those that renewed their mortgage, satisfaction in the terms again, 7.9 out of 10. And the terms mean things like their prepayment penalty and the actual term of the mortgage. Satisfaction with mortgage experience, the whole mortgage experience on the renewers is 7 out of 10. For those that got new mortgages, terms was 7.7 out of 10. The overall satisfaction with new mortgages was 7.8 out of 10. So overall, the consumer is very satisfied with their transaction in getting a mortgage in the past. The over 55 group is more so. So here's some information that you'll want to pay attention to. When your mortgage next comes up for renewal or renegotiation, how likely are you to place your mortgage through the same lender? Those surveyed, 8.9 out of 10. What does that mean to you in the development of your business plan? If almost 9 out of 10 people are going to renew or renegotiate with their current lender, you've got to have a CRM program, and you've got to be working that database to make sure that you are the first person in mind rather than the lending institute that you sent them to or that they're currently at. Here's some information about renewals. 32% of homeowners with mortgages had some activity in the past year. 9% took out a new mortgage, that's of that 32%, and 23% renewed. 15% of homeowners with mortgages refinanced early, and 53% of that 15% paid no penalty. However, 18% of that 15% paid greater than $5,000 in penalty. That's an amazing stat as far as we're concerned, in that many people were prepared to pay a penalty in order to refinance their mortgage. 79% of those that renewed stayed with the same lender. 21% changed lenders, and that's up from the 17% of last year. Again, high renewal with the same lender. We need to be sure that we're in touch with those consumers so that when they do decide to renew or renegotiate, that they have you in mind as opposed to the lender that you put them with. Here's some information on fixed versus variable, and these will change throughout the year as well as year over year depending upon what rates are doing, what the Bank of Canada rate is doing. On the fixed rate mortgages, the whole book, that's all of the mortgages that are currently outstanding, 60% are fixed, 31% are variable or adjustable, and 8% are the combination of the two. In the past year, the mortgages that were taken out, 56% were fixed rate and 37% were variable or adjustable rate, and 7% was the combination. So the fixed rate was down a little bit last year. On those with fixed rates, 72% said they've always had fixed rates. So those are people that are looking for security, want to know what the payment's going to be every month, every year for the term of their mortgage. 28% have switched from a variable to a fixed. So they saw that the fixed rates were low and decided not to take a chance on the variable rate continuing to be low. 50% of that 28% switched in just the last 12 months. Those with variable or adjustable rate mortgages, 33% said they've always had a variable or adjustable mortgage, and 66% have switched from a fixed mortgage. So they've changed their mind and they think that the variable is the way to go, 66% of them. 22% of that 66 switched just in the last 12 months. So you need to be able to quote this information to your consumer because, again, you're a specialist and, again, you want to be able to give them the information to help them in making the decisions that they need to make. Amortization. 87% of the borrowers expect to pay out their mortgage before the amortization period of 25 years or longer. Overall, the borrowers expect that their actual amortization period to be about a third shorter than the original contracted period. Broker customers expect to pay their mortgage off 2 years sooner than bank customers. That's an interesting piece of information, that the broker customers know more about prepayment or early payoff in their mortgage. Increase in mortgage payment tolerance. These are some very interesting stats, and we'll talk to you about the potential that those that already have mortgages holds out there for you. Overall, 68% of those surveyed said that they can increase their payments by $300 plus. $750 was the average increase tolerance. $900 was the average increase tolerance for mortgages that were originated this year. That tells you that the consumers are getting lower payments because the rate that they are getting is lower, and they can handle a higher payment amount if they choose to. When you combine that information with the equity stats that are out there for us, 68% have equity in their homes, and 78% of that 68% have greater than 25% equity. 74% are comfortable with their equity, and 46% are somewhat comfortable, 28% very comfortable. 10% of mortgage holders took equity out of their home in the last 12 months, and this is down from 15%, which is reported in May of 2011. In the refinances that were done last year, 62% were debt consolidation or repayment, 40% were renovations, 22% purchase of another home or another property, and education. 8% were for investments, and 6% were from others. So if you combine the stats of the equity that the consumer has in their home and their tolerance for having a higher payment, that shows some potential, or that should play a part in developing the strategy for your business this year. Prepayment, 36% of all mortgage holders made an effort to pay down their mortgage, 16% increased monthly payments, 17% paid lump sum payments, and 5% increased the frequency. 37% of the mortgage holders who originated their mortgage between 2006 and 2011 made an effort to pay down their mortgage. The awareness of prepaying a mortgage is increasing, and so therefore more consumers are doing it. The education that the consumer receives from the broker indicating the benefits of paying down the mortgage faster and the amount of money that it will save them is definitely having an impact on the consumer. This is a chart that will show to you where the mortgages went this year. So let's just take a look at all mortgages. In 2010, 55% went to the bank, and again in 2011, 55% went to the bank. In 2010, 25% went to the broker, and this year 27% went to the broker. In 2010, the credit union got 11%, and they're down this year at 10%. That would be where the broker picked up the extra 1%. And in the other category, 6% in 2010 and only 5% in 2011. These numbers stayed pretty much the same year in and year out. It's unfortunate. We'd all like to see this number increase, and you'll find that on mortgages on purchases that this number is higher. Last year it was about 33%, and I would expect that it would be about the same. That has to do with the first-time home buyers are usually younger and more inclined to go to a broker than the older people, loyalty to their banks. That should also affect your strategy going forward, knowing that the younger crowd is more inclined to use a broker than the older crowd. Here's some information on the housing outlook and the economic state of the country. Employment is 1.3% higher than at the start of the recession. However, it continues to be well below pre-recession levels, but it is increasing and improving. The outlook is positive. Level of sales is proportionate relative to the size of the population. The activity is 10% lower than 2003-2004, however 15% lower compared to those peak periods of 2005 and 2007. The sales are stable at this point. The economic and housing outlook, average sale house prices is 11% higher than pre-recession peak. In the U.S., the prices are a third below pre-recession peak. Housing starts are 15% lower than pre-recession, but they are stabilizing, and these facts are consistent with the moderate rate of job creation post-recession. There were approximately 28,000 net immigrants into Canada in 2012. This is up from 15,000 in 2011 and up from 26,000 in 2010. Within the 6 months of arrival, 17% of immigrants are homeowners, and within 4 years, 50% of the new Canadians are homeowners. This information will help you in developing a strategy relative to new immigrants into the country this year. If you're not that familiar with how to handle the new to Canada mortgages, then you can go to our Verico Academy, the mortgage brokering course, Mortgage Brokering 101. There are chapters in there that do talk to you about doing the new to Canada mortgages, explain what to do, explain the process of immigration that will help you in going after that market and developing some more business. Mortgage lending. In the past 5 years, mortgage lending has expanded by 53%. An average rate of 8.9% per year. It's gone to 1.079 trillion. As of August 2011, the growth rate for 2011 was 7.2, when it had been forecasted only 6% for the year. Some stats about the growth that we have experienced over the past few years. You'll see in 2007, before the economic crisis in 2008, the growth was at 12.4. It dropped down to 10.2 in 2008 because people still weren't totally aware of what had happened, and it was down to 7% in 2009, 6.5 in 2010. Now the forecast for 2012 is 7.3, so back up again. So things are looking good, and it's a positive outlook for the mortgage lending industry. 40% of the consumers have a good understanding of what mortgage brokers do. This is up from 33% reported in 2010. 36 is the median age of a broker customer. So again, as we said earlier, it's the younger crowd that are using mortgage brokers. And 42 is the median age of the lender customer. Consumers' top reasons for using a broker is, number one, to get a good rate. 2, to benefit from the broker's research. So again, they're looking for specialists in the mortgage industry. 3, to get multiple quotes. For years now, the stat has been 1.9 quotes per customer. Number 4 is to obtain product term recommendations. So again, looking for a specialist with mortgages. The consumer's top reason for not using a mortgage broker is, number 1, their loyalty to the bank. And this is generally in the older crowd, greater than 55. Number 2 is they just didn't think about it. So that could do with your CRM program or lack thereof. Number 3, they didn't think brokers could get them a better deal. So that, again, is people that just don't know. So it's important that you spread the word in any way that you can through your marketing plans, using the database that you have to get referrals from, so they speak for you out on the street with their friends and their relatives, and the awareness of the mortgage broker and the good that they can do is more evident. This is what you said about the key challenges that you face. 44% lack of consumer awareness and understanding. That speaks to the previous slide as well. We need to increase the awareness. So anything that you can do on your part should be part of your strategy going forward. 32% said the lender mobile sales force. So that would be the mobile sales force for the Royal Bank, the Bank of Montreal. 21% risk of lenders leaving. 21% is too many brokers, although we have seen that a number of brokers have left the industry, that those that aren't getting enough business, perhaps were newer to the industry, started in 08 or 09, are not getting the business they require in order to support themselves, and so they have left the industry. 10% is shrinking lender profitability. According to Canadians that were surveyed, the broker's interest is 60% their own company or brokerage, 45% their clients, and 25% their lenders. And this is a little bit disappointing because it says that the Canadian consumer feels that a mortgage broker is more concerned about their own interest in their own company as opposed to their clients. This 60% should be at the bottom, and this should be at the top. So this whole thing should be inverted, and it's up to you to make that change. Canadians are most satisfied with their broker when they contact them 4 to 6 times per year. However, 68% of mortgage holders receive less than 2 communications per year from their broker. So the question is, why do Canadians feel that the broker's interest lies with their company or their brokerage over them? Well, here's the answer. You're not contacting them enough. They want to be contacted 4 to 6 times per year, and they're saying that they hear from you at only 2 times a year or even less. We're going to show you a slide that breaks down the difference in the opinion as to how often you're reaching out to your clients. In this slide, we have on the left in the blue the broker impression of the post-sales contact frequency, and in the right what the consumers are feeling as a result of what you're doing. When the brokers were asked, 2% said that they never contact the customer. The consumer said 31% never contact the customer. Less than once a year, broker says 8%. Less than once a year, consumer 22%. Two huge gaps here. Once a year, 19% for the broker, consumer 15%. 2 times a year, 22% for the broker, 13%. So as you can see, there's a huge discrepancy in what you're doing and what the consumer feels. You would have to look at your CRM program, number 1, to make sure that you have one. Number 2, if you do have one and these stats are coming out, have a look at it and determine if that is the best CRM program for you to be using. For example, are you doing completely email? You're not doing any direct mail, you're not making any phone calls. Because I'm going to show you what the consumers surveyed said they want to receive or how they want to be contacted by you. Their preference is 59% email communication, 45% phone communication, and 29% direct mail. So there you have it. The consumers are telling you how they want to be contacted. So if you only have a CRM program using email, then you're not being effective in your CRM program. Phoning customers takes a lot of time out of your day. What you might want to do when you're creating your marketing plan as part of your business plan is schedule yourself out to make 2 phone calls a day in order to spread it out and in order to keep in contact with your customer. In the direct mail marketing program, we are going to be aligning ourselves with a company that will supply direct mail marketing products to you to send out to your customer. So watch for that. You need to use a CRM program, and that has been evident through all of the stats that we've looked at today and has been for years in this industry. You should look at this year as focusing on your client to grow your business. The idea is to get a customer and keep a client. So now we're going to look at the actual business plan template, and we're going to run through how you can complete it. The business plan template is found on this site in PDF format. We encourage you to print it off and to use it. You don't have to use the whole business plan if you don't want. You can use just parts that are relevant to the way that you do your business or that you feel necessary. In the first page of the business plan template, we've asked you to put your previous year results in here. So your productivity and your efficiencies, so volume, funded, efficiencies, your ratios, where you got your business from, and where you sent your business to, and the types of mortgages that you have done. What percentage was purchase, refinance, and switches. It's important, again, for you to complete this because you need to know what you've done in the past year so that you can analyze it and determine if you're going to continue in that area or if you're going to take that focus and put it elsewhere. This is the SWOT analysis. When we said at the very beginning that one of the 6 requirements of a business plan is knowing what you have to work with. So on a SWOT analysis, you look at your strengths and your weaknesses, your opportunities and your threats. Your strengths and weaknesses are internal or affect only you. The opportunities and threats are external, so they affect everybody that's in the industry, not just you. We've given you some examples here of your strengths, size of referral network, your product expertise. We've also listed here some examples of some weaknesses. You could have a poor referral network. So what is your weakness might also be your strength, depending upon how you've done your business. Lack of a marketing plan could be a weakness. So maybe you need to implement a marketing plan and look at that more strategically, or you might have an untrained assistant. Sometimes it's a good idea for you to do this with a partner so that you can really get into it, as they might recognize some things about you that you might not recognize. The opportunities and threats, again, are external. So an opportunity could be low interest rates, new products that are coming out, a new business that is coming into your territory. A threat could be things like a market turn down, increase in rates, or reduction in housing starts. All these could affect you in the way that you do business and how your competition does their business. When you look at your business plan, it's important for you to look at your territory and your market. In this area here, you're going to describe your market. You don't have to do all of this, but we recommend that you do. And the reason that we encourage you to do an analysis of your territory and market is, especially if you have been working in this industry for a long time and focusing on the same territory, your territory will change as years go by. So if you started out 10 years ago focusing on a specific market area or territory, that territory has aged. The kids that lived in that house have grown. The needs of that consumer have changed. So it's important that you have a look at it and be very analytical in what you're doing in that territory. Your competition, again, it's important that you know what your competition is doing, and it's important that you know about them because, again, you're specialists in the field and your consumer goes out and on average gets 1.9 quotes on their mortgage rate, and because of that you need to know what your competition is doing because they've already looked into it and they know, and you need to be the specialist and you need to know what they're talking about when they talk to you. This is your first strategy, and business plan is all about your strategy, which is what you want to do, and out the action items that go with your strategy. So your strategy is what you want to do in your current business. So let's say a strategy could be your external referral source. When it comes to your external referral sources, the realtors that you get your business from, your strategy could be increase the number of referral sources by 5 this year. So in your action plan, it might be that you will want to select 15 new referral sources that you contact and try to start relationships with and therefore get business from. Past client referral source, it could be that you want to do an increase of 10% new business this year gained from your referrals of past clients. Your action item for that, which would go in here, would be that you are going to work your database. You're going to look at your CRM program and determine if it's the most effective. Maybe start a contest or some kind of reward system for your past clients that offer you referrals. And if you don't have a CRM program, perhaps implement one this year. Here's an area where you will do your strategy on your new business. And all of these areas are blank because it's up to you to determine where you're going to get your new business from. Again, your strategy is what you want to do, and the action plan for that strategy is how you're going to do it. On your action list here, you'll see that we have a column for when, so that keeps you accountable as to getting it done within a certain time period. And then you put in here date completed so that you know you've accomplished something, you know that you've got it done, and it'll motivate you to continue to move on to the next action item. We have a section in the business plan this year for retirement and succession planning. This is something that you're not going to find on all business plans, but we think that it's an area that you need to pay some attention to depending upon your age and depending upon how long you want to work and what you want to do with your life. But we think that you should have some kind of a plan in place for your retirement or for succession planning. It could be, for example, that you want to sell your business eventually. A strategy could be that you want to increase the value of your business to $200,000. And what would that take? So your action items would be maybe that you want to send more business to the lenders that offer you trailer fees and renewal fees, because that will give you a revenue stream that helps in the value of your business. Goals. On this page, you're going to put your goals for your annual funded volume. We have a section here for dollar amount in your goal for your funded volume and also units. The reason that we do both is that the dollars funded volume can increase just because the market value of homes can increase, and therefore the amount of the mortgages will increase. Units, we put in the number of units because if you are truly growing your business, the number of units that you fund will increase. And that's a good way of seeing if year over year you are in actual fact increasing your business. We also suggest that you break it out over the months of the year. Have a check for yourself at 6 months, 9 months, and 12 months to see how you are doing. You want to note your goal, and when the month has passed, you'll put what you actually funded in there so that you can compare the two. Seasonality is what percentage of your annual business will be per month. So if you look back on last year and you see what percentage of your business was done in January. Take the amount that you funded in January of last year and divide it into the total amount that you funded for the year. That will give you your seasonality for that month, and do the same throughout the months of the year, and it should total 100%. You might want to adjust that as time goes by. When you're at your 6-month check, you might not be where you hope to be at the end of June, so you might want to increase the seasonality and therefore the goals going forward. Lender distribution. It's important that you look at who you have lender relationships with and who you've done your business with and who you will do your business with going forward, because if you write it down and set that goal for yourself, you will achieve it. Funding ratio goals are really important to the lenders now, and they should be important to you because they're a good indicator of whether or not you're being effective in your business and if you're working for nothing. So if you have a low funded to approval or conversion ratio, which is funded to application, then that means that you're doing work and the deals are not coming to fruition, and that's costing you time and that's costing you money. So we do suggest that you do keep track of this, and again, we think you should keep track of it on a quarterly basis. The goal that you set for yourself and the actual. Perhaps you own your business and you're hiring new brokers. We recommend that you put this down as a goal. We also recommend that you look at net new hires as opposed to just new hires. So you could say that you have 10 agents right now and you want to hire 5, but you have 2 that leave. So you have to look at what your net new hires is, because if you hired 5 and you started with 10 and 2 left, you'd have 13 as opposed to the 15 that you indicated when you said you wanted to have 5 more new hires. Marketing goals. If you haven't done a marketing plan in the past, this page itself could be your marketing plan for the year. So what we have done up here is we've indicated the different ways that you can market. You can send out newsletters, you can send out seasonal postcards, you can do email communication, you can attend trade shows, you can sponsor baseball teams and events. Then we ask how many of each you're going to do, and then what you do is you actually set up a schedule of when you're going to do them and how many you're going to do, and then you record it. And that in itself is a little marketing plan. That's the end of our business plan development and implementation. Again, we want to remind you of the 6 steps to actually achieving the goals. Write down your goals, share them with people who are important to you, check them frequently, look for obstacles that will impact your actually achieving your goals, reward yourself, and celebrate your goal accomplishments frequently, and evolve the goals as necessary. We hope that this business plan training has helped you. If you have any questions, please address them to Verico Academy, and we'll be happy to help you out in any way that we can.